All right, let's talk about the ACA, also known as the Affordable Care Act Marketplace Exchange. It's where individuals and families can go get health insurance through healthcare.gov. The big beautiful bill has passed, and there are going to be some changes upcoming in 2026, and it may affect you and you don't even know it. We took an example of a potential client who lives in an Indiana zip code, 57-year-old male, 56-year-old female spouse, and their modified adjusted gross income for 2025 is $90,000. In the current tax credit system, that income qualifies them for an $802 a month tax credit. That's over $9,500 a year that they receive in the form of a tax credit to help pay for their health insurance premiums. And guess what? That's resulted in them having a health insurance plan, a major medical that covers their doctors, covers their prescriptions, covers all that stuff for only $570 a month. That's about, what, a little under $7,000 a year in premiums. That's incredible. But because the big beautiful bill did not extend the ACA changes that took place during the pandemic, those changes are set to expire at the end of 2025. So what does that mean? That means we're bringing back the ACA tax credit cliff. So when the ACA first came out, your modified adjusted gross income was the calculation they needed, but only up to 400% of the federal poverty level were you able to qualify for a tax credit. No matter how old you were or how expensive the plans were in your zip code, if your household income was above 400% of the federal poverty level, you got no tax credit whatsoever. Guess what the 2025 federal poverty level at 400% is for two people? It's $84,600. Well, guess what? This family now has a modified adjusted gross income over that 400% federal poverty level. So as we go into 2026, this family, who is used to getting nearly $10,000 a year in tax credits, once we turn the page, this goes away completely. They completely fall off the cliff and they receive a $0 tax credit. Whereas before, it would just flatten out and it would descend dollar for dollar, dollar for dollar, dollar for dollar. Now they get nothing. So now, when that entire tax credit goes away, we're looking at $1,372 a month for the same exact plan. Nothing about the plan has changed, nothing about their income has changed, but the legislation has changed. So all that money that they spent in the big beautiful bill, they didn't extend these. And this is who it's gonna hurt. So if you think that this describes you or someone you know, you need to talk to a health insurance professional right away, because they're gonna go from $7,000 a year in health insurance premiums to $17,000. And that's a jump somebody making 90 grand probably can't afford.